Hello and welcome to the brand new episode of The Big Picture. I'm your host Prophet Patel. Today we have Nakli Junjanwala in the studio to answer all your investment queries. So let's speak to our first caller. Please state your name and your query.
My name is Parishan Niveshak. I want to know if markets are overvalued and what I should do with my small cap mutual fund investments.
Nakli Junjanwala, that's a very interesting question. What is your view on this?
If you look at the small cap space, there are many companies that are trading at a higher valuation than their historical average. But still, there are a lot of companies, there are a lot of good opportunities in the small cap segment which can make a lot of money for investors. So my advice to you, Mr. Parishan Niveshak, is that you have to be cautiously optimistic. That's the trick. Cautiously optimistic.
Well, that's a great reply, sir. That still doesn't answer my question.
Well, there is a lot of noise around small caps, and many investors are wondering how expensive they are and whether there will be a very steep correction. Does it make sense to hold them on profit now? And if you too have all these questions, we have made this video specifically for you. Hello and welcome to ET Money's YouTube channel. Now, a lot has been happening in the small cap space. On one hand, the market regulator said the valuations are off the chart. On the other hand, prominent bankers and fund managers said that there is no bubble in the stock market. Now, among these contrasting opinions, we've already seen some corrections. In the past month, the Nifty Small Cap 250 is down 9%. Now, all of this can be confusing, so we've decided to look at the data for clarity. In this video, we will discuss two things. First, we will examine data to see if small caps are expensive. This is based on freely available data. Even you can use these frameworks in the future to check small cap valuation. Second, we will look at investment strategies that have worked for investors. This should guide you on how you can invest in small caps now. But before we proceed, here's a quick update. You are watching this video on our English channel. हमारा एक हिंदी चैनल भी है जहाँ पे ये सारी वीडियोस आप हिंदी में देख सकते हैं. And if you are or if you know someone who is interested in understanding the basics of finance in a quick and easy way, then we have a channel called 5-Minute Finance. I've added the links of those channels in the description below. Okay, let's begin. We will look at three different parameters to check small cap valuations. We will start with the price to earnings or P ratio of the Nifty Small Cap 250 index. Now the P ratio essentially tells you how much investors are willing to pay for earnings of 1 rupee. We looked at the current P of the index and compared to the long-term average. Now there can be three outcomes here. 1. The P is lower than the historical average and that will mean the valuations are cheap. 2. That it is in line with the historical average, which will mean that the small caps are trading at fair valuations overall. And 3. The P could be higher, which signals expensive valuations. Now at present, the Nifty Small Cap 250 index is trading at 12% premium to the historical average. The current price to earnings is at 26.78 and the long-term average is 23.93. Now, we went a step further in our analysis here. We also compared the Nifty Small Cap 250 P with that of Nifty 50. Now historically, the small cap index trades at 6.3% premium to the large cap index. But currently, it is trading at a 17% premium. Now, so based on these two parameters, the small caps do appear overvalued. Now, if you want to do this exercise, you can get the P data of these indices on the NSE's website. Now, we'll move to the next set of data. Here, we will look at how the weight of small cap stocks has changed in the Nifty 500 index. Let me also tell you why we're looking at this data with a simplified explanation. If the market cap of small cap stocks increases, the weight will also increase. A change in market cap means that the stock prices have run up. So this should tell us whether small caps are expensive or not. Now we looked at the historical market cap allocation of Motilal Oswal Nifty 500 index fund as a proxy. We took this data as it's easier to source for anyone, which makes it easier for you to do this analysis. Historically, the share of small cap stocks in the Nifty 500 index has been around 7%. But in the past few months, the share has increased to more than 9.5%. Now this increase from 7 to over 9.5% is massive. It shows how the small cap stocks prices have shot up. And this also signals that valuations are expensive in the small cap space. Now let's move to our final data set. In this parameter, we will map the movement of small cap index vis-a-vis large cap index. Let me take a few seconds to explain how we have analyzed this data. We have taken the daily closing levels of the Nifty Small Cap 100 and Nifty 50 since 2010. We then divided the Nifty Small Cap 100 closing with that of Nifty 50. Here we took the Small Cap 100 index as it's an old index. Nifty Small Cap 250 was launched in 2016. Now when we looked at the past trends, we realized that whenever levels rose above 0.68, small caps were in the overvalued zone, and if they were below 0.54 level, they were undervalued. Now currently, after some correction, this metric stands at 0.65. But throughout January and February, it was above 0.7. This third parameter also shows that the small caps are overvalued. Even after the recent correction, they are very close to the overvalued levels. So these three parameters we analyzed show that the small caps are overvalued or expensive. This is probably the reason why the SEBI chief has cautioned investors about small caps. Now after looking at this data, you could be thinking what you should do now. Should you book profits or stop your investments? Let's discuss that in the next section. Now, despite high valuations in small caps, all you need to do is stick to a few simple strategies. But what are those strategies and how did we find them? Well, we looked at periods when the small cap space was overvalued as it is now and what worked then. In the past, we saw frenzy in small cap stocks in August 2010 and January 2018. Now, let's start with August 2010. Let's assume you started investing in small cap index 2.5 years before the peak of the frenzy. So you started at 10,000 rupee SIP in January 2008 and continued it for 7 years. Now you would have still made 18.4% returns despite small caps falling 8.03% over the next 6 months from their peak in August 2010. Here, your 8.4 lakh investment would have turned to 16.16 lakh. Let's now look at the data from January 2018 to see if this trend persists. Here, the SIP starts in January 2016 and ends in January 2023. The markets peaked in January 2018 and saw a 18.15% correction over the next 6 months. As you can see in the table, the same trend is visible here. In this case, you would have made a return of 15.22%. You would have accumulated a corpus of 14.4 lakhs by investing 8.4 lakh. So the SIP returns despite market corrections are attractive. So your first strategy should be to not stop your SIPs and keep a long-term horizon. But what is the long term for small caps? Well, we believe long-term period should be the one where index never gave negative returns to investors. For this, let's look at the 3, 5, 7 and 10-year rolling returns of the index between January 2010 and January 24. As you can see from the table on your screen, in a 3-year investment horizon, the small cap index has generated negative returns 20% of the time. Similarly, for a 5-year time horizon, the negative returns occurred 3% of the time. But if someone remained invested for 7 years or more, the Nifty Small Cap 250 index always gave positive returns. So, if you wish to invest in small cap fund, then be prepared to stay invested for at least 7 years. And if you can't invest for 7 years or more, you must revisit your investment plan. Lastly, rebalancing your portfolio helps when an asset is overvalued. This also helps you book profits gradually. Now, asset allocation along with rebalancing should be part of every DIY investor's playbook. If you are new to this concept, then I would recommend you to watch this video, where we have covered how asset allocation helps you to achieve good returns and manage volatility. I have included the link of the video in the description section below. Let's see how you can use asset allocation and rebalancing in the current market scenario. Let's say that the last year your portfolio had an allocation of 35% to large caps, 25% in mid caps, 15% in small caps, 10% in gold and 15% in debt. Now, in the past 1 year, different asset types have generated different returns. Now, the rise in certain asset classes has moved your portfolio away from your desired asset allocation. For example, as of March 24, the allocation to mid and small cap pockets have increased due to a huge rally. So, if you rebalance your portfolio, then you will be selling some of your mid and small cap allocation and you will be parking your funds in large cap, gold and debt instruments. This way, you will automatically be booking profits from the asset class that has rallied disproportionately. And whenever you feel that some asset classes appears to be overheated, you can consider visiting your portfolio asset allocation. Now, if you want an intelligent way to manage and grow your wealth, you can consider ET Money Genius. ET Money Genius understands your risk profile and then creates personalized investment plans for short-term, long-term and medium-term investment durations. And once you invest, Genius reviews your asset allocation every month. It studies different data points such as market valuations, price trends, inflation, and interest rates, and then decides the most appropriate allocation to equity, debt, and gold. Now, market trends change regularly. Genesis ensures that your portfolio is best suited for the prevailing market conditions. And with this, we have come to the end of this video. I hope you found this analysis useful. And if you did, don't forget to share this video with your friends and family. I'll see you again with a video soon. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.